as they're coming in. Please put your organization, what city and state are you coming in from? Let us know in the chat. And because we would love to, have you guys connecting with each other. So if you could drop that in the chat, that would be wonderful. So Sherry Marnell is with us today. Good to see you, Sherry. Super excited to see you. So everyone kind of put it in. Yeah. Raquel Paget, hopefully I'm pronouncing that right, is with us today. Of course, Pat is with us, Pat Green. He's over at Angel Capital Association. You'll be hearing from him a little bit later. All right, wonderful. So awesome. Keep it coming. Keep it coming. We got Derek Parson, Buffalo, New York. Wonderful to have you with us today, Derek. So yeah, please come in. Some few housekeeping things. We do have a Q&A box that you all can access. So you'll see it at the bottom of your screen. And any questions you have, please type them in the Q&A box. You can get typing away immediately. Make sure it's in the Q&A box and not the general chat, because from the Q&A box, I will be able to ask our lovely speakers today those questions. Also, at the second half of this podcast, you yourself will be able to join us on the stage as a panelist to share your thought, feedback, to ask a question. This is very interactive. So the first part will have Alden Zecha, Dave Christopher. They'll share their thoughts on fit for purpose funds and capital access solutions. And then on the second half of it, we are encouraging everybody. This is pure learning. This is pure sharing. We want to hear from you. We want you all to share with each other. Christina, wonderful to see you here from Seattle, Washington. See some great familiar faces. Nancy, wonderful. She's excited to see you as well, Charles. Special shout out to Charles, our wonderful fearless leader of NBIA. You'll also be hearing from him a little bit later today. So I'm going to go ahead and kick off this podcast. We got a lot to cover today. And I am going to start with kind of my hot takes. Now, hey, our guests are not co-signing what I'm saying. Everybody will have their own opinion, okay? But I'm going to start with my hot take. And I have two hot takes that I personally want to see addressed in this hour. And if you have some hot takes, again, put it in the Q&A, put your thoughts in there, put it in the chat. You can put your thoughts in the chat if you just want to speak it out loud, right? So my first hot take is that when it comes to investing in businesses, that you do not have to have a one-size-fits-all solution. So in other words, venture capital funds and venture capital fund structures are not the only way to profit from investing in businesses. In fact, equity is not the only way to profit from investing in businesses. So that's my first hot take. And hopefully I get a chance to present some data to you. But spoiler alert, if you look at the average performance of those funds in terms of what the investors on average get back, you'll notice that it actually aligns with several other investment strategies. So the goal is maybe 10x, right? In theory, the reality, as we've seen even from some ACA reports, is that it's more in that 1.8 to maybe approaching 3x return. So you see that, and you actually see that internationally, by the way. So several reports have come out around that. The other hot take I have is that ESOs are deploying a lot of capital. They are one of the greatest seed funders, right, in terms of entrepreneurship. However, my hot take is it is not as hard as they may think, or you may think, for them to actually become fund managers, especially considering some of the new platforms that are out there. We've heard from Heidi Knobloch, Home Field Fund, that will do all the administration for you, right, at a very great rate. We've heard from Village Capital, Alyssa Pizron, right, Village Capital, which will also has another platform for you to do that. And they'll handle not only administration, but help you go out and source funds for your ESO. And then, of course, we've heard from Shubha Chakravarti, who says, hey, if you even think due diligence is really hard, she has automated that process for you to be able to use AI and software to help you with the due diligence process. And Ann Arbor Spark has been leveraging some of her platforms. So those are my two hot takes. If you're an ESO and you're deploying capital, you are de facto a fund manager. You just got to figure out, how do I get some of that fund management fees back in to make it evergreen? And if you're an investor, there's more than one way to get and build wealth. So that being said, I'm going to bring up and start with Alden. So Alden Zecha, I'm going to bring you up. So let's get you on screen with me. So I'm of course going to let Alden mostly introduce himself, but Alden is actually not only on the board, right? So a chair board, not chair, but board member of the Angel Capital Association. So he's representing them. He's also one of the founding members and a managing member of the SideCar Angels, an active angel himself. And if that isn't enough, he is over the angel training programs that the Angel Capital Association puts out. Wonderful training programs. I've actually had the benefit of being able to see that programming, experience it. And so, Alden, could you introduce yourself further to the audience before I kind of get into some Q&A?
Sure, happy to, Angelique. So it's great to be here. Thank you, everyone, for attending. I will say up front, just legal disclaimer, the views I share will be my own, not necessarily those of the Angel Capital Association, nor SideCar Angels, where I am one of the managing directors. So I just want to get that out of the way. As Angelique said, I am an active angel investor. I do co-manage an angel group out of Boston, but we do invest nationally. In addition to that, I do sit on the board of the Angel Capital Association, and I chair the Education and Smart Practices Committee of the Angel Capital Association. So as Angelique referenced, I do oversee the various educational offerings, including Angel University, that the ACA offers. Let me turn it back to you, Angelique, because I know that you had some topics that you wanted to kind of kick off our discussion about.
Yep, absolutely. So, and Dave, I'm coming to you. What I wanted to do, I want the introduction to be fresh with the hot takes. All right. So, haven't forgotten about Dave Christopher. You'll hear from him in just a little bit, but I'm going to kick off this conversation. Alden, first and foremost, we know that you have your own investment thesis as an individual angel. We know that SideCar Angels has their own investment thesis. And we know that the Angel Capital Association has a definition of who they consider an angel. It's a lot of definitions, right? But I also know that things can get a bit squirrely when you think about everybody's personal one. But could you please provide for us, what is the Angel Capital Association's definition of an angel? And then could you also provide for us your personal, because we're talking about fit for purpose funding, and we want to emphasize the point that every investor has their own purpose and finds their own fit. Could you emphasize for us your personal investment thesis and how you kind of came to that motivation? Like what in life motivated you in that direction?
Sure, happy to, Angelique. I'll answer both those questions. The first one is, first of all, I think the term angel itself, and this is a personal view, but I think the term angel itself is now becoming a bit passé in some circles. And I think we really should think about investors in early stage companies, right, broadly. And there's different reasons I say that, because some people find the word angel to be pejorative, and I don't think that's necessarily a good thing. Some others find it to be just, again, passé or offensive. So I'm going to move away from that a bit and just say, the Angel Capital Association really believes in bringing everyone in the early stage investing ecosystem, whether the entrepreneur, whether the investor, whether an ESO, to the table and to strengthen the overall community, the overall ecosystem, and everyone playing in it. So I think that's one thing to think about. I think, how does it define an angel, or what we would have previously called an angel or an investor? It's someone who takes capital, usually their own or maybe their family's capital, and invests it. And I want to differentiate, because there are definitely professional fund managers, professional managers who are investing other people's money. Often those people will be investing in early stage startup companies, and again, are part of the overall ecosystem. But historically, those people have not been seen as what we would have called angel investor themselves, but rather as a fund manager. I think in today's world, though, a lot of this is merging. Because, first of all, most of your fund managers have positions in their own funds. They're going to be investing their own money alongside money that they might be controlling or investing from others as well. So let me just pause there and then move to the second question you have, which is kind of my own personal investment thesis. My investment thesis is really broad. So I'm not industry specific. I'm not geography specific. I actually invest globally as well, not just in the United States, although my group only invests in the United States. I look for opportunities that are blended. So part of my portfolio is focused on what I would call traditional financial return maximization. Part of my portfolio is invested in what historically has been called impact investments, whether that's disadvantaged founders, whether that's an ethnic disadvantage, a gender disadvantage, or in some cases, a geographic disadvantage. So again, I am investing globally, especially in the emerging markets. And then part of my portfolio that's impact related is really looking at how do I return or provide capital to certain, again, people, communities, situations where I think it's going to have the ability to catalyze growth in that area. Again, whether it's with a particular demographic or particular geography or in a particular industry. So I have investments, for example, in education, where I'm a big believer in education, not just because of what I do with the ACA, but just broadly. And so I've invested in a couple of ed tech companies as well, because I want to see growth in education. I want to see growth in that sector as well. So I think my personal investment thesis is broad. I would argue that I have multiple theses and that depending on the investment, I may be putting it in one bucket or another, and that those together form my portfolio.
Okay, Alden, I'm gonna keep you up and I'm gonna
Sure.
put something down. Now you are gonna have grace for me because I, in full candid honesty, did use AI to create this. All right. Um, but I want you to know it is research backed. All right. So one thing I'm going to do, so let me do this. I'm going to share this diagram. I'm going to ask Alden this question before I bring in Dave into the conversation. And hopefully you all can see this. It's a bit AI busy. All right. So give me grace there. But this is a little diagram that I had AI create off of some kind of research. I'm a geek, so my background is in engineering. My PhD is in electrical engineering. So I spent a lot of years doing research. Okay. And so I just said, well, how do we create a graphic of what different models, general models might be out there? Now, there's infinite number of permutations. But what we see is that some angels or investors, right, are looking at wealth creation. So they might go purely venture fund, venture equity fund. They really only care about wealth creation. Some are saying, hey, I want some cash flow. All right. I don't want to tie up my money with some hope of return somewhere down the road. Right. And so they might be looking for a financial ROI, but they want it to maybe do revenue based financing or something of that like because they want cash flow coming out every year. Right. They want those dividends, sort of say. Then there's some investors that are more community development focused. So they're more of a blended finance model. They have an economic and a social ROI that they're trying to get. Maybe they're using a catalytic commercial capital, right, to solve real world community needs. Then there's a strategic advantage. So maybe that was in the med tech industry for 50 years of my life. And I said, hey, I, as a private angel, now going to go and invest in a med tech company with my strategic advantage. I could really coach them and get them going. I could provide the contacts. Or I am a corporate fund and I have a strategic advantage and I only invest in, I'm Medtronic, I only invest in med device companies based off of our particular innovation portfolio. And the last one is mission impacts. I might be an investor that's investing because it has a mission first goal, right? So I want that mission ROI. I do want a financial return, but usually the financial return is I just kind of want something evergreen. If I could get my money back, great. If I don't get my money back, I understand the risks I took, but I had better get my mission back, right? They're more, now those are risks there too, but they're really hoping for that mission ROI. So I share this to say, Alden, in your experience, especially working with the ACA, what would you say from an angel perspective? Have you seen angels in each of these domains or in permutations of these domains? Is there one of these that you're like, this graphic is kind of missing something that in my experience I've seen in terms of this fit for purpose funding model and how investors try to find a model or create a blended model that works best for them? I'm going to stop sharing this so we can have you in full screen.
Yeah, I think to that illustration, Angelique, the one area where I would say I don't see a lot of participation with early stage investors is in that strategic corporate aspect, because typically those are corporate investors, not so much individual investors. However, for the other four buckets that were on that illustration, I would say I've definitely seen individuals in each of those. And like I said, for myself, I span multiple of those buckets. And I think there are many investors who span multiple buckets depending on which investment you're talking about for them. It's a blended portfolio approach. I think anyone who really is thinking about investment wants to have a diversified portfolio, not just in terms of the types of or the amount of return or the industry or anything else, but really in the types of return as well. As you said, community, mission, strategic, and as well as financial, both income financial and a long-term growth of wealth financial. So I've definitely seen people in all those buckets, with the exception probably of the strategic corporate in the early stages. There are investors in that, but they tend to be corporates. They don't tend to be individuals.
Okay, awesome, wonderful. Alden, I'm gonna move you to our green room area, and I'm gonna
Sure.
pull you up, Dave, and I'm gonna spotlight you for everybody. And so, Dave Christopher is actually providing an ESO perspective, but he himself has been not only an entrepreneur but an angel investor of his own right. He's invested in businesses personally. He has created funds through incubator models that have invested, for Dave will correct me if I'm wrong, but I do believe millions in businesses continue to invest, right? And from various investment vehicle structures, from third-party guaranteed loan structures that are inked out with institutional banks, to angels, just wealthy individuals who are mission aligned, to his incubator accelerator, even to institutional foundations like Rockefeller that said, hey, we will invest in the businesses that you are invested in. So Dave, could you introduce your organization, your incubator, but also kind of your own, like, what is your purpose model when you think of helping the businesses in your incubator with what they're trying to accomplish? What's your mission alignment with that?
Thank you, Angelique. I really appreciate this opportunity to share. But so Dave Christopher Sr., president and founder of AMP, that stands for Adventurous Minds Produce Extraordinary Dreams. Started in 2020 during the height of the pandemic and all this sort of racial unrest and things that were going on at the time. Um, Saw the disparity in the population of Black and brown folks in Louisville, Kentucky versus the number of Black and brown business owners in Louisville, Kentucky, one number being 22%, but the actual number of businesses was like 0.08%, which was insane. The total number was 2.6. And so I thought that didn't make sense to me, and was able to, through, sort of relationships and work that I've done before, raise somewhere around 3 million, $3 million plus in like 6 months, and started the very first business accelerator. And business accelerator at the time, it was called Russell Technology Business Incubator. It was actually a mistake, but I won't get into that. The naming was a mistake. That's a whole nother story. But anyway, we have since rebranded AMP Business Accelerator. So that's what I've done, and I've had several businesses myself. Actually, my background is in technology. I've had several companies, successful businesses. When I got into nonprofit, so you ask, like, what is my sort of philosophy, and why is it I do it the way I do it? Because what I realized was there was this huge disparity in the wealth gap, and like how folks sort of leveled out amongst each other, right? And so I saw this huge disparity in what predominantly white people were doing, and what predominantly minority people were doing, in that big gap, and what was the reason behind it. And we all understand that that's ownership. Like, if you own a thing, if you own a business, that generational wealth, that's how things are built. But the resources and opportunities weren't there for these folks that we were serving, and the access to those resources weren't there. And it just really seemed simple to me that you could make that happen. And I was blessed to like be able to like use that knowledge that I have around successful businesses, and just the goodwill of people, and Angelique was on my board when I first started the organization. It was actually started as just a music program. I had some pretty crazy ideas because I believe all things are possible. So, and I believe that there's no zero sum game. That there's plenty of money out there. There's plenty of like really good people that are willing to invest in things that make sense. And so I thought, if I could bring businesses together, help them to understand what the foundation looks like and how to build that. And that's where Angelique had a really, really powerful part in what we did in terms of like business coaching and that. Because I knew people had the ability to do the thing that they did. What they didn't have the ability to do was the business of the thing that they did. And so if we could solve for that problem, we could solve for the problem around funds and like access to capital, fair capital, right? then that's how I wanted to operate. And so I've created relationships, like to Angelique's point, is that with institutions and banks. I mean, like right now we're working with 3 banks who are offering lines of credit to our businesses. They go through our program at a rate that's less than what people would typically pay, because we're trying to, just trying to help folks. Anyway, I feel like I'm rambling now, but that's sort of my philosophy, is that I'm mission driven and community focused. And that's how I sort of, if you will, invest. And even my personal funds, I've been blessed to like really do well in business on my own, and understanding that, my faith says that it's not all for me. That if you that, a friend of mine told me some years ago, it won't come to you if it can't go through you, and I don't want it to ever stop going through me. So I don't know. Hopefully, I answered your question, Angelique. You know me long enough to know I'll go forever.
Well, you answered it. You more than answered. You actually answered my second question too, and so I'm super excited. So we're gonna take in probably 2 minutes. We're gonna take a little intermission break. I'm gonna bring Pat up before he has to leave, and bring Charles up. But Dave, I do have a follow-on question. A lot of ESOs feel like there's no capital out there because of
Mhm.
their experience. It's not just a feeling. Sometimes it feels like, where's the money to help my businesses? And they also feel like, it's quite challenging. Like, let's say if I could even raise capital for a fund, it might be quite challenging to even administer that fund, or to manage it, or to know to do due diligence. And I know, having worked with the organization, that you all, although you have a mission focused goal, even with the businesses, it's, what does that balance sheet look like? What does that profit and
Mhm.
loss look like? Even though not much of a balance starting out, right? What does that profit and loss look like? What do your numbers look like? So for ESOs that might be on this call or watching the podcast later, what is one kind of quick, just almost like a hot take piece of advice leading into the break, and then we'll come back and talk more about it, on how they can approach finding capital, creative ways to find capital for the entrepreneurs that they serve?
I mean, it's going to sound really kind of trite, but like relationships, organic relationships, real relationships with people that believe in what you're doing and that will be there for you. And what I can say, and I'm super proud of, is the people that were with me in 2014 when I started this thing to now are the same people, because I have relationships with those people, and your friends talk about you. And so the capital is out there. It's just that if nobody knows where it's at, and you have anybody that's close enough to you that knows enough about what you're doing to then share that information with you, or share your information with somebody else, that would be the hot take. Is the money is out there. You have to create relationships that put you closer to that money.
Wonderful. I love that. So I love them. Relationships. Probably going to hear that a lot during this
Mhm.
podcast. You're going to hear that a lot in Raising Capital. It's relationships, relationships, relationships.
Mhm.
I am going to go ahead and pull up Pat and Charles. So Charles, if you put your camera on, and I'm going to let you take it away, Charles, with Pat, because you guys have an exciting announcement. So I'm going to spotlight both of you guys here. All right, there we go. And I'll let you guys see your announcement. At the same time, I'm going to release a poll from my side. So it's a quick poll. So as they're announcing it, you'll see a poll pop up, and we hope that you would take that as well.
Great. Well, thanks so much, Angelique. And as David gave us a great entree, it's all about relationships. And over the past several years, MBIA has been looking at how we can better support our members in doing entrepreneurship ecosystem building in their communities. And so it's my pleasure to welcome to the podcast Patrick Guhin, who is the executive director of the Angel Capital Association. And Pat's going to share an exciting new initiative in the spring where we are working together as two organizations.
Well, thank you, Charles. And, I've been listening to this, and what a rich conversation. But imagine how powerful this could be if we were all together for a week face to face. And that's really the opportunity that we think we've created. This is a NBIA webinar, so I'm sure most of you are familiar with the ICBI conference that takes place. That'll be at the Hyatt Regency in Dallas next April. And ACA is also bringing our annual event called the ACA Summit to the same hotel the same week, just a couple days later. So from the 17th to the 21st of April at the downtown Dallas Hyatt Regency, we're going to be together. And following the traditional format, You can register for the ICBI conference. That'll start on Saturday. That'll run through Tuesday. ACA will be doing our event Monday, going through Wednesday. So it's not hard to see that there's some overlap there. So what we're going to have is a couple of joint days on Monday, Tuesday of collaborative programming. And then we're going to have some special events for you. And we've got a program committee that Charles and I just came from that's working on all the details. Looking at the keynotes for this, we're going to have what we call Innovation Funders Showcase, a limited number of spots that will be those early stage companies, most of them pre-seed, that will be pitching to investors and ecosystem builders from around the country. And we really think that a lot of this agenda and the conversation can be shared face to face over that period of time. You'll hear lots of news from NBIA on this. You'll hear news from ACA on this. You'll be able to register for either event, which will include that combined couple of days in programming, or for a modest incremental fee, you'll be able to stay the whole week and take advantage of everything. So it's some exciting news that I know the leadership of both organizations is pretty pumped about, and we're hoping that the company will, or the country will, respond positively. It will all be organized from the Dallas focus of the membership of both ACA and NBIA. In Dallas area, we have the North Texas Angel Network. We've got one of their leaders that I see is on this call as well. They're working closely with the NBIA members in the area, and I think it's going to be a great event. So hope to see you all there. Thank you.
Wonderful. Charles, anything about from the NBI say about membership that you want to mention
Sure.
before I
Yeah.
remove you all?
Yes, sure. I'll be real quick. And again, Dave, you're a great straight person. You said it's all about relationships, and if you're in entrepreneurial support and you're looking to increase your impact, MBIA is a great way through relationships to increase your impact. We look to provide trusted connections, professional recognition, and a collective voice with advocacy or for advocacy. And it's all around trying to help it to strengthen your programs and your organizational and professional effectiveness. So if this sounds like something that you would be interested in, to be a part of a community of practitioners to help sharpen your impact, I'm going to ask Lindsay to place into chat just a link to our membership page. Check out the benefits, and feel free to reach out to us, and we'd love to explore how that might fit for your organization.
Wonderful. Thank you, Charles. Lindsay beat you to the punch. She's already got it in the chat, so everybody can find that. If she hasn't already posted, I'm sure she'll also post a link to our eBuilders conference, which is coming up in Detroit. Wonderful opportunity to do some workshops there. And then as well, stay tuned for the release of registration for the conference, joint conference with the ACA. So thank you both for joining us. So I am now going to go ahead and bring back up all of our, guests, and we're going to kick into some more conversation. So give me a moment as I bring you all up. So Alden, I'm bringing you up, and then Dave, you're coming up in a second, and we'll all be Brady Bunch here in a moment. There we go. All right. So there's one question I kind of want to start off, and I would like both of you to answer this question. So the question goes something like this. It could be challenging, whether you're an investor or whether you're an ESO trying to connect entrepreneurs to investment, to be able to form those critical relationships that, Dave, you mentioned were so important. Can you each give just some tips, some strategies for how those relationships could not I would say the identification, right? So how do I identify the right relationships for the type of fund I'm creating or the entrepreneurs I'm seeking to serve? And then how do I position myself to actually be in the room, sort of say, whatever that room looks like, virtual, physical, inbox room, to build out those relationships? So maybe I'll start with you, Alden, and then I'll kick it to you, Dave.
Sure. Thanks, Angelique. I think, and I totally agree with Dave, relationships are so key. I think historically people have looked very much within silos, whether that's the ESO silo, whether that's the investor silo, whether that's the entrepreneur silo, and they tend to think that way. And that, I think, is the big barrier, is people need to look outside their silos to build these relationships. So when an ESO is reaching out to, let's say, investors or potential investors, right? That investor may or may not agree with that ESO's thesis for investment, but that investor can be a conduit to other investors. So it's the same thing I tell entrepreneurs. You can talk to an investor, and that investor may not be a fit for you, but they probably know investors who are a fit for you. So the key is don't see someone who they say, gee, this isn't the right relationship as a closed door. Rather, see it as an opportunity to say, who do you know that might fit as a fit with my organization or be appropriate to work with my organization, right? And that's the way to go after it. I tell entrepreneurs frequently to also always be looking for investors, even when they're not fundraising. It's absolutely fine. And in fact, I encourage the entrepreneurs to do this, and I would encourage ESO to do the same thing. Even if you're not looking for investors right now in your program, because maybe you have a cohort timing and there's seasonality, whatever it may be, go out there and say to people, I'm not looking for someone right now, but this is what I'll be looking for in 6 months, a year, 2 years, whatever that time frame is, or I was looking for last year. Do you know anyone? People are much more receptive actually to hearing, I'm not looking to you right now. I'm not looking for money right now. I'm looking for you to give me advice. They will be much more willing to spend time, effort, energy, and direct you to the right people. And another thing I've always told entrepreneurs and ESOs as well, who are looking for funding, looking for resources, looking for partnerships, is if someone declines to work with you, and there may be many reasons why, say to them, thank you, I respect that. Would you just do me the courtesy of introducing me to 2 or 3 people that you think would be a fit for what I'm doing? Now, they may or may not reciprocate. They may not give you those instructions. But if you don't ask, you probably won't get them. So I think that's a way for people to expand those relationships broadly across those silos.
Wonderful. Well, Dave, he said that I remember one time through your organization, you had a friends raiser. I think it was something called like that. It was the first time I ever heard of that. And yeah, and that was, of course, in a different context, or you're raising funds for the operational side of the organization. But what advice could you share to individuals who, organizations who need to make these relationships, so they just feel like, I ain't got no friends right now. How do I make friends?
Yeah, I'll go to something that Alden said, which was really, really important, is that, and it goes back, it ties to something I've always said, is friends talk about friends. And so, like, what happens a lot of times is you'll go to a person for something and you realize that, okay, or you maybe between the 2 of you realize that this is not a fit for us. But if you have somebody in mind that you know that it is a fit for, you should be willing to share that information with another person and say, hey, look, I know you don't necessarily want to work with me, but Alden is working on something that best fits what you do. But the only way that actually happens is if Alden and I have a relationship such that I can talk about Alden. And so even with those investors, those people that you're trying to get funds from, you want to create relationships such that they will either share their resources with you or be willing to let you share other folks that fit with them, because it's a win-win. They're looking for people to invest in. You're looking for investments, and it should be this back and forth thing. And I think the way that happens is you have to be honest and upfront. When you talk about like somebody I'm gonna do with, and Angelique knows this about me, is I've turned down money because it wasn't it wasn't a good fit. It just didn't. The person didn't feel right. This is a person that like will do a thing, but then it's not in alignment with what I'm trying to do and where I'm trying to go. And I think a lot of times we're so focused on getting the dollar that we'll take whatever comes in the room, as opposed to going in the room. And I'll tell people this all the time: to go in the room and see who you're in the room with. It does not matter if that person has what you need. You don't want to get in the bed with somebody that's not going to be a long-time relationship. I'm proud of the funders and things we have and the relationships we have, because I was just doing a tour earlier today, is on the board of funders that we have that we display. The majority of them, if not all of them, have been with us since the very beginning because we are, in effect, friends, or we have a really good relationship. And I think be careful about going into rooms with this desperation covering your body around what it is you need because you're desperate, and people see that and sometimes will take advantage of it. I'm not saying it always happens. We'll take advantage of that, but also, as an investor myself, I'm worried that you're that desperate, right? And I can see it all over you. So that's a concern for me. So I think if you go in a room and be clear about, I tell people, and Angelique started this for me before, is that ask for what you need, not what you think you'll get. Because I know for me, again, as an investor, when you come in too low, I'm concerned that you don't know what you're doing. But typically people come in low when they're asking for something because they're thinking, if I ask for too much, then I won't get it. So that's sort of my take on, like, the money is there. And I say this all the time and people think it's nuts when I say it, but there's plenty of money out there. I'm on the board of the Federal Reserve. I've seen where they print it. I've been in the room where the money sits and I know that it exists. It's just that you got to create genuine relationships so that not only do people talk about you to other people, but then you can share those resources that you have with other people. So
I love it. I love it. Dave, I'm gonna bring up Christina, but what you said, I've been in the room where the money sits, reminded me of, I'm a millennial, and we had this viral thing and we were saying it for years. I want to be where the money resides. And so,
that's
like, I've
it.
been there. Okay. I've been where the money
Yeah.
resides, and where you really want to be is where the relationships reside, is what I'm
And more
hearing from you.
importantly, yeah, more
More
importantly,
important.
absolutely. My
Wonderful.
point is the money's there. Be in the room in relationships that where people will share. Like, I have people literally, and this is not a brag, this is a fact, calling me almost daily, offering money, offering opportunities, because I was just in a meeting with the city, like, hey, we so and so told us to come talk to you because we have this thing that we need to do, and they said that you could probably do it for us.
Yeah, and I'm going to bring up Christina. She has a hard cutoff, but I want to mention, as I'm removing David, David, we'll circle back to this because I'm going to bring you back up on this context that's coming your way, which is money isn't just, when you think of equity, right? When you think of wealth creation, real estate is a big part of that.
Mhm.
And Dave, through his organization, has also raised capital in that lane in terms
Yeah.
of helping and supporting entrepreneurs. So I'll ask you a little about that, because ESOs, we have many ESOs on here that are centers and are wondering, like, how do I build an infrastructure? How do I raise capital for that? As a material or infrastructure capital source for entrepreneurs. So, Christina, I'm going to add you. I wanted to bring you up, and I'm excited that you're joining us from the audience, and because you have a wealth
Not
of
wasn't
experience.
prepared, so don't look quite as beautiful as you do,
That's
Angelique.
okay. Well, you always look beautiful. I thought, well, she must have been camera ready. All right. But Christina, could you share a little bit about your mission alignment, and when you think about your investment portfolio and some of the organizations, the funds that you have created? And then in line with that, again, kind of back on this relationship topic, like your tip on how to build relationships in that lane, when you're, again, say an ESO or fund manager, and you're trying to actually raise the pot. So not necessarily an entrepreneur, but I'm trying to raise the pot to give
Right.
to them.
Right. I feel like I've sat, and Alden might feel this as well. Sometimes when we are those who are either, have angel groups or have created funds, I mean, we have to go out there and fundraise as well and find what we call LPs, or limited partners, for our funds. So I often say that I feel like I've sat in the seat of entrepreneur sometime in the fundraising raising aspect, because really, I mean, Dave spot on in all of his comments. It's, money moves at the speed of trust, and people have to
Mm.
really trust you and build those relationships before they're going to invest in you. And so I did that with
Mm.
my own LPs, and built a network. So I have been part of two major funds. One is the Jump Fund, which we built in Chattanooga, Tennessee, mid-sized city in the Southeast, really to direct funding to women in the Southeast who were female founders. So we started our first fund in 2013, and really, we're seeing no capital either being run and held by women or being invested in women. So we wanted to change that scenario, and we successfully did. And now so many other funds and networks have been launched across the country. And then the second one I was involved in is a Next Wave Impact Fund, which was again another collective of women investors. So educating women as these early stage investors, an asset class we have not really been invited to the table around, been engaged in. And so trying to build that up, so that then they can maybe not only focus on other women getting money, but like they bring a different perspective to their investment. So those groups of women have been really instrumental in building whole new industries, including femtech. So you see this huge emergence of, menopause and women's sexual health products that were not seeing the light of day until a bunch of women investors, really women angel investors, got involved and said this was important. And then, of course, the market saw the opportunity, right? So now it's blowing up. Naomi Watts is building, her own product at this point. So I think that alignment that David was talking about, finding the right aligned investors, being in the rooms where it happens, so showing up, just showing up and introducing yourself as a founder, get your 30-second elevator pitch, not being desperate, as Dave said, but making sure you're, out there. And then my other one, I always like to say, my adage is, ask for advice, not money. Because when you ask for advice, you potentially start building that relationship and get the money in the end. But if you go forward with asking for money, you're going to get advice. You're not going to get money. People are immediately going to be like, oh, that's nice. Let me tell you a few things, and, good luck with that. So unless you're doing a formal pitch, but this would be sort of just in your first meeting. So those are some hot tips that I feel like have been effective with us. But alignment is really key. And there's a bunch of impact investors out there right now who are more interested in different funding structures. So maybe some, lower returns potential, but higher impact potential. I, as an impact investor, want to see both. We are investing in women who have high return potential. My impact lens is that I want to see more women running companies and leading and being investing in them. So, I think you can have a both and structure as well. So is that helpful?
That is amazingly helpful. I'm going to remove you from the spotlight. But one thing I want to piggyback on in terms of what was just mentioned, you can have both. So this feeds into our next question that we received for the Q&A box. Oftentimes it's like, oh, you're funding female founders, or maybe you're funding rural founders, or maybe you're funding Black and brown founders, whatever the demographic is, whatever the regional focus is. And the immediate thought is, well, you must not want to make money. And it's like, no, you can do both. And the other thing is with ESOs or private investors, the other thought is, well, I have a mission for my life, a purpose for my life, or a purpose for my organization, whether you're an individual or you're an organization. And so therefore, I should just, I guess, forsake creating wealth or being able to create an evergreen fund or be able to create a fund that has returns, right? That you can actually redeploy or even, give to LPs. I should just give that up, right? Because mission and actually making money don't go together, right? I would have, it has to be 100% charitable means no money, right? And I always say this, a nonprofit doesn't mean you can't make profit. It just means nobody can own it. Okay. So on that vein, I'm going to bring Alden up because Derek Parson, he had a question, and I'm going to kind of read this out loud. And it goes along with that whole concept of, can you be an ESO with a mission orientation and build alongside a VC firm? So he says, have you heard of, seen of, or know examples of ESOs building VC firms alongside each other in order to fund different types of founders/entrepreneurs that go through their pipelines? And Alden, could you answer this question?
Yeah, sure, Angelique. So I threw an answer also in the online chat that might help people, but I'll expound a little bit further. So first of all, yes, I've seen examples of this. I've seen both nonprofit and for-profit funds aligned with ESOs. Some cases organized by the ESO, in other cases just aligned with ESO, but actually operated independently. There's lots of legal, administrative reasons why different structures exist, right? So first of all, yes, have seen it done. I also put in the chat or the Q&A box that some of these are formulaic investors. They invest in every startup that goes through the ESO program, assuming that the startup completes the program. So that's usually a requirement. They have to go through the entire program. If they drop out halfway, they don't get any funding. Others are selective. So I've seen others where they will only look at startups that went through the program, but then still subject them to some level of diligence, qualification, decision making, and they may or may not invest in that startup. And so you definitely have seen it. Again, in the cases where they're organized by the ESO, it's usually people, the investors in that fund, are usually people who have some affiliation with the ESO, either emotional affiliation or literally a legal affiliation with the ESO, could be a university situation, alumni, so on and so forth. In cases where it's run independent of the ESO, it's often just community members who like the ESO, like what they're doing, see an opportunity, and believe that the companies coming out of the ESO's program will have a reasonable chance or a better chance of success. Again, the investors can range from I want money back and I want a good financial return to I would like my money back, but I'm more interested in community returns. I'm more interested in community situation, and I've seen everything under the sun. So these definitely exist, Derek. Happy to talk more offline if when appropriate.
Okay, wonderful. Thank you so much. Dave, I'm going to bring you back up for kind of a final question, and then I will be able to ask both of you just a real final. So this is a final one for you, and then we're going to have a parting question. So Dave, I wanted to get at this kind of diversified fund portfolio, sort of say, right? We know probably many ESOs and investors know, like, okay, I'm an equity investment in a business, or maybe if you're more mission aligned, I might do even a grant-based philanthropic investment in a business. But there's also this non-financial investment piece. There's this infrastructure capital. So at NBIA, we have an organization called Creative Capital Collaborative. And in that collaborative, we have this icon. I'm not going to show it now, but we said there's really 7 main capital sources that you would need as an entrepreneur and that you want to be providing to entrepreneurs. There's more funds than just financial. And one of those funds is material. And the other one is infrastructure. And so, you know, I know of other funds in Chicago that start out with we just give you a check for your business. And now they're raising $100 million fund to build manufacturing facilities to provide that facility space as another type of capital. You have done that likewise here in Louisville, Kentucky. Could you talk about how not only a diversified portfolio in terms of what type of capital you provided to entrepreneurs, but how you had to have a diversified portfolio, fundraising portfolio to make that happen? Could you give just a little bit on that?
Yeah. So I think it was Alden that talked about like the idea that we're a nonprofit, have a nonprofit tax status, but we're a business. And so, you know, when you push away the myths around nonprofit, you understand that as a business, we actually, and I've done this, and we talked about this earlier, Angelique, about at one point I had a business that needed a $250,000 line of credit or loan, operating capital, and I took out $100,000 certificate of deposit and let the bank put a lien on that deposit. I did a personal guarantee for their rent, that kind of thing. Invested in furniture for their business, purchased the lease, those kinds of things. But we're able to do that because we also have assets. We own a building. We own 2 buildings. We own the one you talked about, like the building I'm in now is a $13.1 million. That was a $13.1 million project to build a space for these businesses to be, and then we have renters in this space. We have different revenue models that we create up here at our building at 25th and Broadway. We have tenants that pay enough to pay the mortgage on that building, and that building is our building. So it's just about understanding that you're a business that has a nonprofit tax status, and that all of these things are open to you and available to you. Again, you just don't own it. Like it's not you don't walk away at the end of the day when you say I'm done with this and you take that stuff with you. But at the same time, when I talk about, like, I don't want to always have my hand out trying to like get people to give me money, grants and donations, all those things. And we do all that. We do it really well. But we do that because, as Donna talked about earlier, is we don't walk into the room desperate. We walk into the room in a position that we can sustain ourselves. And it also looks good to people. Like, the reason I talk about people calling us almost daily with opportunities, because they know it's a safe bet. This is an organization that's not chasing its tail, that's running and doing things financially correct, and they have a good structure and a good organization, discipline around the things they do. So what I would say is to ESOs, other ESOs, the money is out there, but you have to build the foundation and the structure underneath it for people to trust. Who was it? I'm sorry, Christina, that just got off, and when she said money moves at the speed of trust, I think I've heard that before, but when she said it so well. I got to post that, because that's the truth. Is that when you're an ESO specifically, people don't really necessarily take you seriously around your ability to do good business. They think that you always lead with, which I do. I lead with my heart, right? But I also lead with my mind and my knowledge, right? I can, and to your point, there's an organization called the Connor Group. They're a big commercial real estate company in Ohio, and they're a really great example of how you take a for-profit business, probably multi-billion dollar business, and also they're building schools in Ohio. You know what I mean? Like they've got this for-profit business that is doing good. And I think that's possible that if ESOs would understand that you can operate in a way that you can, in your terms, it can be evergreen, that you can always be, we've been around 12 years. We went from a $24,000, nonprofit, 48,000 the next year coming out of my pocket to now like a 4 point something million dollar nonprofit with about $20 million in assets, right? Because we operated as a business. And I think ESOs should understand that you have the right and the legal right to do that very thing, that you operate as a business.
I love that. That right there. I'm going to pull Alden on. I just think if I could emphasize that over and over and over again, you have the right, the legal right
Yeah,
to make money.
you do. You
And you
do.
have, and I'll put it to you, you have the mission responsibility to get a
Yes.
return, right?
Yes.
Because
Yes.
you need to be sustainable. And a lot of even foundations and grants, they're asking, how are you going to be sustainable? And
Yeah.
then sometimes I have heard, ESO say, well, all the money seems to go to this particular ESO in our region. But if you look, it's oftentimes that ESO will be the one that has more of a sustainability plan, more assets, or more. And so they're like, well, I want to put my money where I know the bet is a little bit more secure. But that's not to say, like you said, you start out with just a small little
Yeah.
pot of money, right? And
Couple
your own
dollars.
investment. So also
Yeah.
for ESOs that are like, man, I feel like I don't have a way of getting into the game. I'm just starting to create my ESO. How can I create a fund? You're like, it doesn't take much to get started. And as you build that trust, as you build those relationships, and the trust comes from impact, as you make that impact, then that money can snowball and roll and you can really get going. So parting thoughts on, maybe just give you guys 60 seconds each. Any parting thoughts specifically around the area of creative capital vehicles? I think most people are familiar with traditional equity or maybe a traditional bank loan, but could you give a parting thought on how investors, ESO fund creators, right, fund managers can leverage creative capital vehicles, third-party guaranteed loans, revenue-based financing, convertible grants, the list goes on and on, mezzanine, structures and things like that, special purpose vehicles. Could either of you just give maybe 60-second parting thought on how that could be key when you're thinking about building a fund or funding entrepreneurs or getting a return on your investment?
I'm happy to go first on that. So thanks, Angelique. So I think the key here, in my opinion, or a key takeaway I would offer the audience is think creatively because there is capital out there. And I think Dave and I, in our prep call, we talked about this a lot. Capital is not the constraint. Access to capital may be the constraint. The actual existence of the capital is not the constraint. But if you think creatively in ways that will become a win-win-win for the entrepreneur, for the investor or the provider of capital, and for the ESO, right? If you structure it that way creatively, it will succeed. And I like Dave's point, and I used to actually teach a course on that just because you're a nonprofit, you should run yourself like a for-profit entity. The only difference being that you're reporting differently to the IRS and you don't have owners, right? So there's a tax difference, there's ownership, but your philosophy, your approach, your mindset should always be for profit. Be efficient for that capital. Provide wins to your customers, your stakeholders, whether they're the entrepreneurs, whether they're the investors, or both. So that's the takeaway I would leave the audience with, Angelique. And again, I threw my email in the chat. Happy to follow up with anyone who wants to. Just email me directly.
Wonderful. Dave, could you also put how they could contact you? It doesn't have to be your email, but it could be any way to contact you, website. And then
Yeah.
Alden, I will give you an extra minute. You have something exciting, a call that happens that's specifically designed to bring investors and ESOs together that the Angel Capital Association has put on. Could you, in 30 seconds, give us kind of a sneak peek of that call and so people would know that opportunity exists?
Yeah, thanks, Angelique. So I threw a little bit in the chat. ACA has a monthly call now for university affiliated organizations. They can be ESOs, they could be instructors, whatever it may be, to talk about peer issues. Coming out of that, we're seeing demand try and put something together to marry up ESOs with investors. We haven't yet finalized exactly what it's going to look like, but we are taking input to that. So for those ESOs on the call who want to get involved with that, definitely message me, send me information. If you're an investor, you want to talk more about ESOs, also you can message me. Again, we're still forming exactly how that's going to look, but we are very excited about this. We feel there's a crying need for this and want to try and fill that using our convening authority.
Wonderful. Okay, Dave, 1 minute parting thoughts. If you could share that with us, I would love it. And thank you both again for your time.
Yeah, I don't even 1 minute. I'm gonna just say everything that Alden said. Just being creative and understanding that all things are possible. And I mean that with all sincerity. Like all things are possible. The money's there. You just have to be creative and bold enough to get it. Like that's all I would say. I agree with everything that Alden said.
All right, awesome. Well, thank you all for joining us. I'm super excited that we've had a great conversation. Please stay tuned. We'll have more of these conversations, more opportunities, even some certifications, some joint opportunities, perhaps some joint courses, hopefully with ACA coming down the pipeline. So see everybody next time. All right, bye-bye.
Thank you.